Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh and the market is a little bit off the day's low right now. So we're currently seeing absolutely flat on the Nifty, is just around 2 points in the red. We had broken below the 18,100 mark as well. So we have come off the lows a little bit, but still holding up absolutely flat. A lot of the pain has come through in the banking names as well because that has lost significantly from the top. So you can see right now that index holding with a gain of just around 0.4%. That's what's happening with the markets, but we do have a lot of queries to get to and we're going to talk about all of them in just a bit. But first up, let's invite our guests on the show. We have Ruchit Jain of 5paisa.com as well as Astha Jain of at Hem Securities joining us to take all of your queries. So let's quickly get to them. Astha as well as Ruchit, thank you very much for joining us. We have lots of queries lined up and the first person is with us on the phone line. We have V. Satish who writes to us from Chennai with a query and he has investments in Tata Elxsi. Mr. Satish, if you can hear me, please go ahead and ask your query. Both of our guests are on the line and then we will get in their opinion.
Good afternoon. I have 100 shares of Tata Elxsi bought at 8,255 in September 22. I would like to have know the prospects for a one-year horizon.
Okay. And can you tell me how long you're willing to stay invested?
1 or 2 years.
Okay, 1 or 2 years. So Astha joins us. And Astha, if I can pose that question to you first. So Tata Elxsi, he bought it, at quite a high price. He's saying 8,255. It's currently at around 69.80. So it has come down significantly. It's down around 18% in just 1 month. Can you tell us, do you think there's a chance that if he stays invested for 1 or 2 years, he could recover a bunch of those losses?
Good afternoon, Pavitra. Talking about Tata Elxsi, I think if the horizon is such a longer term, that is of 1 year or more, then definitely he can stay invested because there is no logic of booking losses at present moment of time. Although the results which this company has posted in the quarter gone by were not at all encouraging, and only on the basis of the results we have seen some downgrades have also come on the street. But what impresses me about this company is still, they have gained the market share in the Europe and the other areas. Although the negative movement of the currency has impacted their financials, and that's why we have seen downgrade also from the street side. But going forward, we really believe in the strong fundamentals of the company because they provide the lowest cost of delivery. They have the highest offshore mix, and in fact their client concentration is not high because they have a reduced client concentration. So all these positives make this company fundamentally strong in the longer term. Although in the shorter term, they might show some sort of miss at the results in the quarter gone by and in the future also. But in the longer term, I think he should stay invested. My initial price targets are 8,200 if everything goes well going ahead with the company. So at least, and I think his cost price is at around those levels. So I think he should stay invested because the time horizon is long term.
Okay, he should stay invested because the time horizon is long term. Remember, the high for Tata Elxsi was around 10,684. That is the level that the stock had gone to before. Of course, it did see a significant correction from those levels. But I hope that helps you, Mr. Satish. The guest is saying that you should stay invested for now, and considering the fact that you do have a reasonably long time horizon. So that is the view on Tata Elxsi. But moving on, we also have Dhruv Kapoor. He writes to us from New Delhi, and he says he holds 50 shares of Gail. He bought this at 100 rupees a piece. He says he's a long-term investor again, so that's a positive, and he wants to know whether he should hold or he should stay invested at the current level. So what would your call be on Gail, Astha? Of course, this one, the current price is around 89. He bought it at around 100, so he is seeing some losses. But, this is a theme that we've seen play out across this sector in the past couple of months. Room for upside here?
I think although the results were not encouraging, again, I'm taking results right now also, and I'm talking about the results because they are the recent developments which these companies are showing. So the results were weak, that we all know, and that's why we are seeing some sort of pressure. But going ahead, there are certain other factors which can really work. First of all, the results were muted because I think some of the segments were not working well for the company. Volumes were muted, but going ahead, they have certain capacity additions which will add to the volume going ahead. And in fact, I think, the This gas prices etc. also will help the company. So altogether, I think in the longer term, this company will gain and they will sustain the margins also. But in the shorter term, due to the poor results, maybe we can see some sort of volatility. But in the longer term, 99 is the price target, which I can attribute to the stock, and one could stay invested in the stock at least for longer term.
Okay, stay invested in Gail. That is the view from Astha. Let's also toss this over to Ruchit. Ruchit, if you heard that query, he says he holds 50 shares of Gail. He bought this at 100 rupees. Of course, the stock has corrected from those levels, but take us through how the charts are looking on this one. And do you see that there is chance for a good up move on this stock?
Yes, hi, very good afternoon. Well, I think if you look at the price-wise move, then already last 5 or 6 months, the stock has seen a good correction from the high levels. The stock is now trying to form a good support base around that 85, 84 levels. So I think the downside from here on seems to be very limited for the stock. At least a pullback move should be expected. Even if you look at last 1 month, then a lot of the PSU names are witnessing good buying interest. And the recent up move has also been supported by rising volumes. So pullback move towards 105, 108 over next couple of months could be seen in the stock. So my advice would be to hold on to current levels. It should go above his cost of 100 rupees. And when it comes around 105, 108, that ideally would be good levels to again take a review.
All right, so hold on to Gail. That is the consensus view from both of our guests. I'm sure that helps our viewer. The next one is from Dheeraj Srivastava. He writes to us from Pune and says he wants to invest either in Patanjali Foods or in Tejas Networks. So he wants to know which among these two stocks would be the best stock to enter into the market right now. Very different stocks, of course. But Ruchit, let me come to you on this. Take us through how both of these are looking. Of course, if you just look at how they fare, the stocks have done well for both of them, for Patanjali as well as Tejas.
Yes, certainly. I think if I look at technical chart structure, then both of the stocks are looking positive from mid to long term perspective. A high top, high bottom structure. The medium term charts have witnessed price up moves with good volumes. So these are all parameters which usually one trader or mid to long term investor should look at investing based on the charts. So my advice would be it's very difficult to make a choice from both of this, but it would be wise to take positions in both of them, maybe 50% in each of them, whatever amount that he wants to buy. So I think ideally that should be a good idea.
All right, so you can just invest in both of these stocks. That is from Ruchit. Asa, I don't know if it's fair to ask you which one you would prefer, because you can look at these companies that are totally different. But take us through your call on both of these, and then if you think that they're ripe for an investment.
If I have to make choice between both of these, then I will like to go with the Patanjali. Why? Because see, in the Tejas network, at least in the shorter term, I think some sort of volatility can be seen because the results were not up to the mark. And since the result season is going on, everyone is looking after the results at present moment of time. So Tejas network, maybe it can show some sort of volatility. But for Patanjali, I'm pretty confident that this stock can show upside. My price target is around 1600, and Patanjali is looking good to me because we all know that it is one of the largest edible oil companies in India. In fact, when they have acquired the food business of Patanjali Ayurveda, so it again is providing some sort of impetus to the financial performance of the company, because their food business was enjoying the operating profit margin of around 16%, which is quite attractive at the present moment of a time. So I think and going forward also, Patanjali is doing this backward integration where they will be manufacturing into and they are going into the palm oil plantation. So again, it will reduce the dependency on the imported CPO. So all in all, whatever steps this company is taking at the moment of time is also looking decent. And all in all, I think Patanjali is a decent buy at the current level with the price target of 1600. For Tejas Network, since the results were not up to the mark, he can wait for some more dips and then we can again review the position.
All right, that is the view on Patanjali Foods as well as Tejas Networks. We have another query coming in. This is from Bhuvaneshwari K. He writes to us from Coimbatore with a query. He says he has investments in Timken India, and I'm going to let him actually, put his query out to us and take us through the levels, because this is a story where a lot of money has been made. So, sir, if you can hear us, please go ahead. Both of our guests are on the line, and I'm sure they'll help you with whatever your query is.
Hello.
Hi, sir. Please go ahead with your query.
Hello.
Hello.
Sir,
Yes.
madam, good afternoon.
Good afternoon. So I'm hearing that you have investments in Timken.
Yeah. See, the last 1 week, Timken is going down. Whether I hold it or book profit, I'm a long-time investor. I got the share from IPO.
Okay.
Earlier it was a Tata Timken, then it was converted into Timken India in the year 1996.
Yes.
I am very much fond of this share, so I want to continue hold it for a very long time. Whether I hold it at present or book profit.
All right. I can understand you're very fond of this share because it has made you solid profits. You bought it at 40 rupees a share, 150 shares. And, currently it's at 2,700. So that is the kind of move that we've seen on Timken India. But I understand that, in the past week, of course, there has been a cut of around 6% on the stock. So let's ask our, our guests what they think that you should do right now. Astha, let me come across to you on this one. This is clearly a story where a lot of money has been made. Even this year itself, Timken is up around 45%. He shouldn't worry about too much about what's happened in just 1 week, right?
Right, and I think one of the major reasons behind such sort of stock movement is that whatever results they have posted, the other income component was really high. If I talk about the financial performance of this company, and that's why we have seen the jump in the profit after tax, which is around 20-23%. So all this can be attributed to the other income rise, and that's why the streets are not liking the results, and they are not, showing some sort of improvement in these stock prices at present moment of a time, but long-term story is intact because this company which manufactures anti-friction bearing and all these products they really use in the defense, automotive, etc., railway sector and all. And I think with the announcement of Vande Bharat trains, and there are various other future I should say growth drivers for the company, which can make this company a really positive investment in the longer term. In the shorter term, these results are playing dent on the company, and that's why we are seeing some sort of volatility. So here, if the horizon is long term, this really need to worry about anything, and he can hold the stock. But in the shorter term, yes, I do agree, some sort of volatility or downside can be seen.
All right, Mr. Bhuvaneshwari, I hope you heard that, since your view is of a long term and you're looking to stay invested for the long term, you have nothing to worry about. This is because of a little bit of a blip that came through in the results where they had a high other income component. The street is perhaps reacting to just the earnings. So if you are looking to stay invested for the long time, there's no problem and you can continue to stay invested in this company. That is the view on Timken India. The stock has seen a big rise from 40 rupees when it listed, and it's currently at 2,700, and our caller has sort of cashed in on all of those gains. But with that, we're going to get into a short break on the show. You don't go anywhere. Up next, we're actually in the middle of the earnings season. So Bhanu Chopra of RateGain Travel Technologies will join us to talk about their Q2 earnings as well. Hey guys, welcome back. You're still tuned into Your Stocks. By the way, Ujjivan Small Finance Bank's Q2 earnings flashing on your screen. The NII is up almost 70%. So that is looking good. By the way, take a look at that stock. It's up over 8% right now. Sharp spike coming in as soon as the results were out. Asset quality has improved. The gross NPA ratio at 5.06 versus the over 6% that we saw earlier. The net NPA has also improved, as you can see on your screen. So for now, the numbers that we're getting from Ujjivan Small Finance Bank definitely look good. The net profit is at 294 crores. This is versus the 273 that we saw last time. NII also stands out as a key positive. The stock is just continuing to trend higher. It is up almost 10% right now. So that is on Ujjivan Small Finance Bank. But let's get back to our queries because we have lots to grapple with. We have Ruchit and Astha still with us. So let us get to the next one. We have Albert Xavier, who writes in to us from Kerala. He says he holds 33 shares of Dixon Technologies, but he bought them at 5,500 rupees a piece, which is at quite a high price. He is a long-term investor and he wants to know whether he should hold or he should sell. Let me come to you, Ruchit, on this. He got in pretty much at the high the stock has seen, and what would you suggest? Because this year, the stock has definitely seen somewhat of a cut. It's down around 20% for the year.
Yeah, so we have already seen some good price-wise correction when the corrective phase started since last year's October. And right now, the stock has also seen some time-wise correction. So I think the downside from here on seems to be very limited. Since it's a mid to long-term investor, the long-term charts are still positive for the stock. And on the higher level, they can expect at least levels towards 5100 to 5200 range in next few months. So these are not the levels where you should look to exit. So I would advise to continue to hold on. When it comes around that 5100, 5200 mark, it's better to take a review at that time.
Okay, so continue to hold on for now. That is the technical view on Dixon. Let's also bring Astha into this one. Astha, do you agree with Ruchit there that it's best to hold on to Dixon for now?
Sure, because my price target is somewhat near to him, 4,900 or 5,000. Because again, today whatever I'm talking, will be talking about the results first of all. So results were good, although there was some miss in the OPM or the operating profit margin, and that was mainly due to the drop in margin in their mobile segment. But all in all, I think management has guided strong revenue growth of around 40% going ahead, which is looking good to me. And I think going ahead also with the backward integration, the company will be able to show strong margins also, operating profit margins and other margins. So all in all, I think he can hold the stock. Price target for me is 4,900 at the current moment of a time, which is again subject to revision going ahead.
All right, current price target of 4,900. So maybe he could recover some of the losses that he's seeing right now. That is the view on Dixon. The next query comes in from J. Rajgopalan. He writes to us from Pune and he says he holds 100 shares of Natco Pharma at almost 830 rupees. He wants to know whether he should stay invested or sell at current levels and book his losses. Astha, coming to you on Natco Pharma again, this is a stock which has, corrected quite a bit. He did get in at a higher level. It's at around 625 right now. Do you see room for a good, a good pickup in this stock, and then maybe you could recover some of his losses?
Maybe if results will be supportive, that we are expecting it to come on 10th of November. So till that time, maybe he can hold the stock. After results only, we can review the position again. And he can again, call in the Your Stock show. So talking about what present is the story about this company is basically they are into the manufacturing of the complex generics, and especially in the US. In fact, in India also, they have a strong product line in the oncology, around 38 brands they are having. And in fact, they have launched one product in, I think, February or March by the name of Revlimid. So, this is, again, it is used in the blood cancer. So this is a very strong revenue generator for this company, and it can be going ahead also. So all in all, I think at present, it is better to hold the stock rather than booking loss or exiting out of it, because results are around the corner. Till that time, one can hold the stock.
Okay, hold the stock at least till the Q2 earnings are out, and then we can take a call on it. Astha, Ruchit, thanks a lot for joining us and taking our viewers through all of those queries today. We are going to leave it at that. But like I told you, we're
22 crores annual contract value. But as you are aware, most of our contracts are multi-year, and the usual lifetime value is about 10 years. In terms of the pipeline, the overall pipeline, it stands at around 315 crores, and we are quite confident that we will have a very, very good conversion of this pipeline going into Q3. And as I've noted previously also, the second half of the year is usually a stronger part of the year for us, given, a lot of the budgeting happens at a lot of our customers during this period. So, we are quite hopeful for a lot of these decisions to happen. And so I'm hoping our H2 will be even superior than our H1.
Bhanu Chopra, thank you very much for joining in. That's RateGain for you. Very strong revenue growth, 47% increase on a year-on-year basis. The new wins have picked up on a quarter-on-quarter basis. The deal pipeline too is higher, and the company is saying H2 should be seasonally stronger, and that perhaps will result in record deal wins in the coming quarter. With that, we're out of time, but do remember to email us your queries and we'll address them with our experts. Stay tuned. Closing bell is up next.